Hallmark Institute of Professionals. Register for Business Management, ICT, Sales and Marketing, Purchasing and Supplies, Banking and Finance, Community Development, Project Management, Graphic Design and Digital Marketing. Enhance your professional competency as a CHRPK, CPAK, Certified Secretary, Insurance Specialist, Trust Secretary and courses in Pension Management. Check out our annual training calendar and corporate trainings on our website or call us on 0708 355 941 or 0700 031 162 or visit our offices in Nairobi. Hallmark Institute of Professionals. Transforming lives.
Hallmark Institute of Professionals School of Languages invites you to register for English. This includes testing of English as a foreign language, German, Arabic, Chinese, Sign Language, Spanish, Kiswahili. We are located at Agriculture House 3rd floor, Harambee Avenue, Nairobi. Learn at your flexibility either online or physically at the time of you chose. Our contact are here and in our social media pages at Hallmark Institute of Professionals. Welcome to the Center for Transformation.
So my name is Miriam Murage from Standard Investment Bank. I'm a senior relationship manager, and my role is to align investors' objectives with a viable investment solution. So today, as Irene has said, thank you so much for organizing this forum, and thank you everyone for joining. I know you must have left everything that you're doing to just listen to this talk. So I'll just get right into it. So just allow me to share the presentation. Confirm that you can see something.
Yes, it's visible.
It is. It's okay.
Yes.
All right. So first of all before we even get into our discussion today about the comprehensive investment opportunities we have in Kenya, today I want us to just talk about diversification, and which is why we are here today. So like I said, my name is Miriam Murage. I'm a senior relationship manager at Standard Investment Bank, the Global Markets Division. And before we even get to the various investment solutions that we offer, I would quickly want us to have like a sense of direction. They say without a compass, you don't even know where you're going. So your goals are like that direction. So before we even get into investments, why are we investing? So the first, like I aligned them, there could be many goals that you're looking into to achieve. So, but the most common investment goals that I get to interact with as I'm talking to different investors in their daily life. By daily life, number one is augmenting pension savings. So you're working today, you're very energetic, but then again, what about the later years? What happens in the later years? Will you have some passive income to help you live off a comfortable life after you're retired? Again, most people confuse retirement to be something with age, that comes with age. But there is also early retirement. You could be young, but you want to retire off your employment early, and then you start enjoying your good returns, a good life without having to work a day in your life. And that is all about financial freedom. Then wealth creation. Someone else wants to really work so that whatever investment they have, whatever money they have or capital they have is not just in the bank and being eaten by the monster called inflation, but taking advantage of that opportunity that is offered by a viable investment solution. Then they create their wealth. They do what we call taking advantage of the compounding effect of their investments. So there's that element of wealth creation. This investor just purely wants his or her money to continue growing over time. Then there's that paying for education. Some of us have children, and some of us are still in school, and you pay school fees. So this is a recurring expenditure. You don't pay school fees once, you keep paying maybe per term or per semester. And with this ahead of us, you want to plan ahead and make sure that you take care of this. Yeah. So some want to take their kids to very prestigious schools, and they don't want to suffer from, the element of luck. So that is another objective that we look at. Then another one could be a major project. I talk to some investors, they tell me, oh, I want to start a business complex in the near future, maybe in 5 years. Or I want to have some apartment somewhere. I want to start a major project, a biogas plant. I want to start a business like that. But how will you start this investment without having some capital? So instead of, again, going to borrow, there's the element of, I already have this amount of money. Can I invest it, and then the money will work for me, and then whatever return on investment I get in 5 years, then I can start my major project. So I'm always a happy relationship manager when my clients come and tell me, now it is that time. I've invested with you for 3 years or for 4 years, and whatever is there now is enough to start my project. So I get very happy when we achieve those goals. So the other one is just travel. Investment returns can be used to pay for your travel or to your dream destination. You want to go to Asia, Europe, to the US, and you want to have a time of your life without having to keep checking your bank balance. You plan well in advance. So we sit down and you tell me, I need X amount of money per year or per every quarter, and then we work backwards and see which investment solution will be available for you. Then the last but not least is, just personal financial goals. Excuse my spelling there. So such as buying a car that you've always wanted, changing your wardrobe, or maybe sprucing up your house, your home. You want it to look nice, and you have to put aside some money for that. So there are many kinds of investment objectives that every investor has, but it's good that we delve into these investment solutions and see which ones are they. So we have very many investment options here locally in Kenya. First being savings accounts, fixed deposits, government bonds, treasury bills, stocks or what you call equities, real estate, unit trust, mutual funds, pension funds. I forgot to include the SACCO dividends that you get from the SACCO and all that. So starting with the savings account, this is normally free. You go to your bank and you open a savings account. They normally maybe restrict your withdrawal period to maybe once a month or twice, depending on the bank that you're in. And normally the interest is at 15% withholding, and annualized return is 1%. The typical account, some people don't put the money in a current account. They want to put in a savings account, which is better. They get 1 to 3%. However, do I really recommend that? That's a topic for another day, for today, later, this evening. Then fixed deposit accounts. So you are running around your business and you're thinking, this money, instead of staying in the current account or in a savings account, why don't I fix it for a period of maybe 6 months, 3 months, or even 12 months, and then get the value off of it? So the interest income is normally 50%. Annualized return is between 7 to 10%, depending with your bargaining power. Again, with your bank and your bargaining power, you can actually, negotiate for better. Then you have government bonds. This is always something that normally comes up. So the government is giving this, why are you giving me less? Or are you really giving more? Yeah, so government bonds literally means you are loaning the government. The government needs money to finance their projects, maybe infrastructure or whatever projects the government could have. So you loan the government, and in return, they give you an interest called coupon. So the coupon or the interest is paid twice in a year. That is, every 6 months, you get your coupon. So you have two types of bonds. We have the FXD, the one that have fixed interest rate. That one charges withholding tax. And then we have the other one that is called the IFB, so the infrastructure bond. That one, currently there's no rate, there's no tax, but there are talks about, including tax, but have not been confirmed. Then we also have the corporate bonds, which these are just given by corporates, and depending on how the companies are doing, you can decide to get into them. However, I am more into maybe government bonds compared to corporate bonds. That is my own, maybe I have a bias towards that, because government bonds, Kenyan government has never defaulted so far. And it still helps investors earn some good amount of interest. So when we talk about annualized 9 to 12%, this is net of the taxes. So you will hear over 15%, you just multiply times 0.855, or you remove the 15% withholding tax. Then there's the element of treasury bill. So for the government bonds, the minimum you need is about 50,000 shillings. Guys, imagine 50,000 shillings. You can get into the government bonds. Then for the treasury bills, the minimum is 100,000 Kenya shillings, and they come into different days, 91 days, 187 days, and the whole year. So you can just decide which one you want to get into. So the interest income is about 15%, annualized return of 7 to 10%. So again, has the element of withholding tax. Then we have stocks and equities. This one I would recommend for a long-term investor or someone who's looking into the future. You getting into different stocks depending on the performance of different companies. Then you invest in them, and then you expect a return at the end of the day. So 10-15%, highly variable depending on how the market is. Then you have the real estate. This one is now a big elephant in the room. Everyone wants to own a piece of land, a piece of property, which I don't object. I always say that it's good to also diversify your portfolio into this. Like you buy your apartment, you buy your real estate, but then when again it comes to the issue of liquidity, you have to be a bit patient with it. Hence why we always recommend that when you do real estate, also include some liquid investments. So rental income averages at about 10% per annum. And then the typical fees, you have the legal fees, property value, you have the agency fees, you have the maintenance costs, and you're paying, the agent fees are the management fees. So you have to factor that cost in. And then the annualized return is between 8 to 12%, depending on the location and what property you're dealing with. Again, a viable investment. So they have the mutual funds, where you find the money market funds. These ones are normally offered by some fund managers, including insurance firms, and also some fund management firms that start this kind of investment, which is a very good investment. The management fee, 1 to 3%. Mostly there is no exit, so it's 0 to maybe some will charge a fee if you exit before. Then the tax is actually 15%. Sorry, apologies for that. It's actually 15%. Annualized return of 5 to 12%. That is net. So with gross, you have someone telling you maybe 14-15%. When you deduct withholding tax, your take home is 12%. So is this a bad investment? No, it's not a bad investment. It will cater for your short-term needs, and it is actually much better than someone who's just putting their money in a current or a savings account. Pension funds. So pension funds are another way of augmenting your pension. Remember, in our goals, we are talking about augmenting retirement income. So pension funds, the management fee being maybe 1 to 2%, and an annualized return of 7 to 10%. Ladies and gentlemen, it's good to factor in the rate of inflation, which keeps changing in Kenya. There are many fundamentals that actually trigger this change. So currently we're talking about 4.64%. There's a time it went up to 8%, 10%, and so forth. So you need to really factor in the rate of inflation. Every time you're negotiating for a rate, always deduct the rate of inflation and see how much is my take home? What is my inflation beating return? Is it inflation beating? Am I really beating the rate of inflation, or am I suffering that? So like we talked about the goals, and I would like to just talk about the importance of diversification, which is why we are here today. Before I talk about the element of diversification, I have a story about the Botswana's issue currently. So currently, the president of Botswana wants to migrate some of the elephants he has in the country. He has over 100,000 elephants. And most of us would think, why would a president migrate elephants? I mean, every country wants that for their tourist attraction and for, just making sure that we conserve and preserve the environment. But truth be told, it has been devastating for the citizens in Botswana, especially those ones who live near the forest and the forest cover that has the elephants. So in a bid to just protect the elephants, that is what the president has decided, to move some in Europe, some in Germany, some in different locations, just to make sure that everyone is happy. As the elephants are going to, to take care of their, to maybe look for food and water, or to hydrate, then they are also safe wherever they are. So it's that whole element again. So the elephant in the room is money. So I have the money, but where am I investing? Am I investing in a safe avenue? Am I investing in a risky avenue? And how do I know? So, ladies and gentlemen, it's good to note that different investment options that we have mentioned today are all for different kinds of appetite. There's someone who would like to look at capital preservation, so they're really patient with the investment. They can stay on with that bond for 10, 20 years and still not want to touch it and just enjoy their coupons. Then there's this investor who wants to be accessing every month some return on investment. So they will rather stick their money to a money market fund. Then there's this one who wants to be doing quarterly withdrawals and take care of some needs. So what is the importance of diversification? Like those elephants, when they are spread over, they're able to be they'll be taken care of, and they'll be safe, and everyone is safe. The Mwananchi is safe. The citizen in Botswana is not suffering from eradication of his crops in his parcel of land. So how do we just make sure that we protect ourselves, both our money and ourselves? So number one, when I say taking care of ourselves, I literally mean what would happen if you don't have that income that is coming in every month or every week or every year. So you need to plan well in advance and make sure that you take care of that. So number one is risk mitigation. When you diversify your portfolio, when you don't put all your eggs in one basket, is the benefit of reducing specific risks. There could be what you call concentration risk, when you put all your eggs in one basket and decide, I am doing property entirely. So the issue of liquidity becomes a problem. When you want to liquidate that investment and you want to buy something or take care of an emergency, you cannot do that. It takes longer to actually liquidate. Then you have broader range of assets. So when you invest in more assets, what happens? You can actually gain from the gains of different assets. So you're yielding from asset A, asset B, asset C, and asset D. So a wider range of industries, a wider range of geographical location. So you're actually exposed widely. So therefore, that means risk mitigation by itself. Then you have the exposure to global growth. Again, you're not only investing in one asset class, you're investing in many asset classes. So you access faster growing economies and sectors. I like using, I've noticed that portfolio manager likes using this example, that the typical Kenyan will use different applications. They will use Uber for their travel. They will use AI for different things. They will use ChatGPT. They will use Netflix, Amazon, but they are not, or rather maybe they don't have the information or know how they can take advantage of the system. So they are growing these stocks when they are watching, when they are promoting, when they are supporting these companies, but they are not taking advantage of the investment part of it. Then there's the currency diversification. So you hedge against local currency depreciation. Someone was asking me, so when the rate of inflation is at 8% and I'm getting 8%, am I really safe, or am I uncovered? So those are some of the things I want us to delve into. So last but not least, before I go, of course, East and West home is best. Allow me to talk a bit about Mansa X just as I wind up. I don't know if Irene will give me permission for this, but just on an overview, Mansa X Fund, the Standard Investment Bank, we call it a multi-asset strategy fund. A well-diversified portfolio looks like the way you can see on my screen. that we are not investing in one asset, you're investing in both local and global markets. The fund is able to take advantage of this diversification so that it offers you higher return and it offers you that safe haven, the fact that you're not being exposed to one asset class. So it's highly diversified and gives you different asset classes, currencies, precious metals, commodities, stock indices, single stocks, cash, and a fixed income. And in these assets, they are also geographically located: New York, Tokyo, London, Sydney markets. And that aspect helps you to actually be able to witness genuine diversification. So what are the benefits of Mansa X Fund? It has a diversified portfolio. So in itself, with it being able to offer more than 100 assets at the same time, it's able to give you across asset classes and geographies, diversification, professional management. So we have an investment team behind the scenes which works day and night to make sure that the investors are getting a very good return. And when I say very good is relative. So currently, currently we are reporting a return of 17.4% average since inception. So year to date, January to June, we were able to report a return of 10.6 on the Kenya shillings fund. And we have also we have managed to do 21.2% on gross and 12.94% on the dollar fund. So the fund comes in two options, like you can see on your screen. You have a minimum investment of 27.4, a minimum investment, sorry, of 250,000. You can top up 100,000. The fee is 5%, which is prorated and spread over 365 days. And we have a hurdle rate of 10% above. We charge 10% performance fee above hurdle rate, which we never charged as of yet. So again, going back to what we were talking about, the different investment options, it's good to know where to place yourself. Are you looking for short term? Are you a short term investor? Are you looking to take care of the recurring expenditure, your monthly bills, your quarterly bills, your annual bills? Are you taking care of that? Or do you want to put in your money long term? You want to put in stocks? Can you take advantage of all of them? Yes, you can. You can actually take advantage of all of them. So long as you place the value and the objectives, you align them. You see which one is giving you more value. When can you access the funds? And yes. So before I finally conclude, I wanted to just come into this final slide. We talk about call investments, the fixed deposits, the government bonds, the T-bills and all that. That is also among the asset classes that we look at. And then the global markets, we had just talked about the precious metals and all that. So importance of diversifying in global markets is risk mitigation, the exposure to global growth, currency diversification, broader range of assets, and so forth. So what is the gain? The global markets exposes with Mansa X Fund. So you can actually get this in both Kenya shillings and the dollar, and also for our Sharia. We also have a Sharia compliant investment for the ethical investor or the Muslim client who can take advantage of the Mansa X Sharia. So I think that is the end of my presentation. Maybe I can get questions. Irene, with your permission. Hello.
Hello. Miriam, we can't hear you.
You can hear me?
You can unmute. Yes, we can.
Okay.
Yeah, I can see there are some questions in the chat. Maybe you can handle those for now.
Okay. Someone is asking about what Mansa X trended returns for investors. Mansa X trended returns for investors. Okay, so I'll say, let me try to answer it, although I really didn't get the question, but to help just answer your question, Mansa X has been on an upward trend. The inception, Mansa X started in 2019, that is in January of 2019, and all through to this year, we had averaged on returns of 17.4%. This is courtesy of, just averaging all of them, the 17.4%. The main objective of Mansa X is always to give above market average. We benchmark on government bonds just to make sure that we give you good returns. Then someone is asking, we have a small chama of 10 people deliberate on such investment, but members are diverse, particularly on incomes. Can we start with a minimum of 50K and keep topping up? Thank you for this question, Edward. I'd like to say, because Mansa X starts with the minimum investment is 250,000, but we have listed very many investment options that we have. We can actually look into, starting a money market fund and then grow towards that. Because for Mansa X, it starts with 250,000, but with 50K, you can do so much. You can do a government bond, you can do a money market fund, you can do a T-bill, and specifically because you're dealing with a chama who have different dynamic ideas and the options, they may have so many investment options. I would recommend that you do something that you should think about T-bills, think about money market funds. Then someone is asking, my question is on inflation. Kindly help me understand more on inflation and how it's calculated against ROI. So inflation is literally what has eaten into your money. Your 1,000 bob today, for example, is not the same 1,000 bob 10 years ago. So what happens when you look back and you remember your 1,000 bob, if you were to go to a supermarket and to just buy, I'm sure you could have filled a basket. That means your 1,000 bob could buy so much. But today, the 1,000 bob, once you go to a supermarket, literally it can't fill so much. So that is what means. That is what it means. Inflation eating into our money. So inflation is affected by many things, from environmental factors, the prices of fuel, from just what is happening politically. So currently, with a rate of 4.6, we're not doing so badly in terms of the rate of inflation, but there are times it had rocketed to 8%. So it means whatever money you have, it's losing value equivalent to the rate of inflation. If it's 1,000 bob, it's losing value equivalent to 8% then and 4.64% now. So for you to get more value, every time you're negotiating for a return on investment or whatever investment solution, always negotiate an inflation beating return. So if someone is telling you that the current rate on investment is 7% and you know that the rate of inflation is 4.6, remember, to your pocket, what you're taking home is 7 minus 4%. So you're literally taking home 3%. So you need to negotiate for more. Then another question is, yes, someone is asking me, means Mansa X, anything below 50K is a no-no. Yes, it's a no for Mansa X, but it's a yes for money market fund. It's a yes for a treasury bill. It's a yes for a government bond. It's a yes for and many other options, even dividends in your circle. However, as a chama, you can actually pool funds. You can just pool funds, have your contribution build up, and then you start it. But before that, instead of it staying in the bank, just invest your money. We said there's a difference between saving, which especially we ladies are so good at, saving and not investing. We have so many merry-go-rounds because money is changing hands. And at the end of the day, you ask yourself, am I really fair to myself? Inflation is eating into my money as my money is changing hands, because by the time I receive it, it will not have any coins on top. So I want you to be that prudent investor today. Always ask yourself, why am I having my money in a savings account, yet I can have it in a money market fund, I can have it in a Mansa X, I can have it in a treasury bill, and then liquidate it as soon as I can? Because for all these investments, it's basically just takes, especially for money market fund, it just takes 2 to 3 days for most of them. So, and you can actually invest from even 1,000 bob. It has no limit, but the minimum is even 500 for some of them. So it's good that we take care of that. Then someone else is also asking, what's the minimum investment cash money to join the investment? So like I said, for Mansa X, the minimum is 250,000. That is for the Kenya Shillings Fund. And for the dollar fund, the minimum investment is $2,500. You can top up any amount from $1,000 for the dollar fund and 100,000 Kenya shillings for the Kenya Shillings Fund. Yes, for treasury bills, we said that the minimum investment is 100,000, and for the bond we have from 50,000 Kenya shillings. I think that's it for me. Should you have any other questions? Someone who wants to? Any other question? Someone is asking me, kindly explain how the 250 minimum investment appreciates, and is the percentage of increase constant all through? What is the 6 months lock-in period? What is the risk factor of Mansa X? Thank you, Mark. So the minimum investment of 250,000, that is what you can join with. But if you have more, yes, of course, you can add on to more. Then you can add on to that. Then the lock-in period, we have a lock-in period of 6 months, and this is not to punish you as an investor, excuse me, but to make sure that you have more value for your money. I'll give you an example. When you plant a tree today, and then it's 1 year down the line, you don't have experienced some good growth for the tree. It's just merely a small tree. But when you give it time, it continuously grows. So that is the main benefit of compounding effect. When you're asking about the increase, this is what it means. So Mansa X reports on a calendar quarter basis. Calendar quarter is January to March, April to June, July to September, then October to December. So once you come in, for example, you come in January after your quarter has ended, and we reported like this currently this year we reported a return of 5.6%. So January to March, we report 5.6% on your 250,000. On your 250,000, whatever goes to the next quarter, as we are done with the 31st of March, is the 250,000 plus 5.6%. Let me do a calculation of that. So 5.6% of 250,000 is 14,000. So 14,000 plus 250,000, that would be the initial opening balance for the second quarter of the year. So quarter 2 begins April to June. So on 1st of April, the closing balance, which was 264 of the first quarter, will be the opening balance, so forth. So we keep on compounding. So within a period of 4 to 5 years, you will have doubled that investment because of the compounding effect. You realize also when you're reporting, say like last year, we reported an 18% net. For an investor who was there from 1st of January to 31st of December, you will notice there's a small percentage increment because of that compounding effect. So that investor who does not withdraw, you remember the goals we talked about, capital growth or wealth creation, that is where it comes in. So then what is the risk factor in Mansa X? Again, when we talk about risk factor, like take you back to the issue of diversification. So with diversification, you're spreading out the investment in different asset classes. Now imagine this, you're having over 100 assets spread out, different geographies and different asset classes. So what that means, it means you have very minimal risk because you don't have concentration. You're not putting all your eggs in one basket. You're spreading them out. So that in itself is a risk mitigation strategy. Again, we have other complex strategies that we are able to input, including the infrastructure we use. We put in stop loss limits for every investment that we invest in. We also make sure that we have different brokers, and we're getting into different markets, and we have a very well-informed investment team that gets into the opportunities in the market. Please share the recording once later. Okay, yes. Sorry, I missed that. Maybe Irene, you can read me the question. Irene, you can read me the question. I think I lost something.
Sorry, Miriam, I'm doubling with something. Christine, you can go ahead and read the questions on the chat. Christine?
Okay, I got it. Can I confirm that you can invest at a time of 50,000, but it will be investigated only in bonds, or invested only in bonds? As a term, yes, you can invest 50,000 shillings. Yes, you can invest. You can decide. So with a chama, you first of all, you need to open a TDS account so that you're able to maneuver the issue of the bonds. So you can decide how you're going to open the account, and yes, it is doable. Okay, I think we are doing well so far. Don't know if there's any other question. Any other question about investments? So the Kenya.
Someone is asking if there's a risk of investing in Mansa X as compared to money market fund. Yeah.
Thank you. That's a very good question. If anything, Mansa X is more diversified, so the risk is very minimal. We are such a conservative fund, and it's actually a time when investors should appreciate that. Yes, you can get more value for your money. You can get better. It doesn't mean that Mansa X will compete at any one time with money market funds. A money market fund will invest in the local market space. Mansa X will invest in both local and global markets. So you will have more opportunities, of course, more diversification, more risk mitigation, and yes, a higher return. So that's the only difference. That Mansa X is a collective investment scheme, and a money market fund purely is in the local market space. That's the only difference that we can give. So, of course, with Mansa, more diversified, more risk mitigation. But both of them are okay. Both of them are regulated by Capital Markets Authority.
There was also a question of how you can get a coach, someone to guide you. Maybe you can tell us more about that. Someone to guide you through the investment journey.
Okay. You can. Okay. I know, Irene, that is also your space in guiding about different investments. Should you want to learn more about the investment, of course, you can always reach out. I will leave my number and my email address for you to contact me for any questions and concerns. My number is 0723 076 766, and I've written it there. Miriam Murage is my name. I think you have it. So should you have any questions about the investment, you're free to ask. But the main purpose of today's conversation was to just talk about different investments and talk about the opportunities that are there when you diversify your portfolio. Why am I in a safe haven when I diversify my portfolio? It means all assets cannot fail at once. Unlike someone who's only investing in just one. So if you're just doing real estate, now start being liquid, because the issue of real estate is whenever you want your money very fast, it's really not possible. But when you are liquid, you're able to take care of the liquidity needs. You're able to take care of those bills, those emergencies that occur. You can open an emergency fund and make sure that you take care of that. So I think that is how I would conclude my presentation today. So don't put all your eggs in one basket. Invest today and make sure that you give value for your money. Make sure that your inflation is not beating into your money. Stop putting money in a savings account, guys. Stop putting money in a current account. Put your money in a generating kind of investment solution, income generating. Look for that passive income. Over to you.
Yeah, just guys, to confirm what Miriam is saying, you realize that at Hallmark Institute of Professionals, like we've always said, we are not just looking into a one-sided successful person. We endeavor to see an all-rounded successful person. And that's why, as much as our core is to transform lives through training and education, where we do academic and professional courses, and we'll be sharing with you some of the courses that we have, we've also taken it upon ourselves as a responsibility to share with you on how to prosper in different aspects. And I think so far so good. We have done very well in as far as financial wellness is concerned. Like Miriam is saying, we are saying do not put your eggs in one basket. The last webinar we did was about money markets with NWealth, and we appreciate NWealth for always walking the journey with us. We've also done pre-retirement planning as one of our webinars. We have also done investing in bonds and bills. And so if you check on our YouTube channel at Hallmark Institute of Professionals, you will see so many of these products. Also to confirm that personally, I am a living example. I want to, most of the times I bring to you the products that I've personally tested. And on this one, I can confirm that I was telling Miriam she's going to walk the journey with me, and she's going to be my financial advisor, especially targeting the Mansa X. I will be personally investing in it in the nearest future as soon as we are done with this, because I am convinced. And I just said, why should I walk the journey alone? I have a couple of people who are actually interested in the same. And so if you need confirmation, if you need reviews, I am a review myself. So I confirm that yes, Mansa X is one of those that you want to invest in. And so let's walk this journey together. Together with Hallmark team, as we share the academic and professional courses, the diplomas, the certificates, the artisans, we are saying, yes, you can prosper career-wise, you can prosper professional-wise, you can prosper financially, and we will be looking at the diverse areas of your wellness and health. And financial wellness is one of our core. So from tonight's call, should you have any questions, should you need guidance, you reach out to me, you reach out to Miriam, and we should be able to walk the journey with you. Feel free. You have our contacts either at the Hallmark office number or personally my number, and we should be able to walk that journey with you. Special thanks to you, Miriam, and the SIB Bank. We are very grateful. The Mansa X is our July target, and so you will see us so more often, and we'll be able to walk that journey with you. And thank you for also SIB and Mansa X product for being our principal sponsor for tonight's webinar. I also appreciate others sponsors like the CPF. They have worked with us the journey, and Sky and Beyond Insurance Agency, and many, many other organizations that have agreed to work with us. We are forever grateful. So for tonight, we want to say thank you that it's done. We'll be sharing this, like Christine said, on our YouTube channel, Be on the Lookout, and you can also check out other products that are available there. Asanteni sana.
So that I read before you go, someone is asking about life insurance. So life insurance is also another element of risk mitigation. And it does not mean that if you invest, you're not supposed to take insurance. Please take a cover for your the things that you have in your house, domestic cover, take a cover for your car, do that education policy, and again, invest your money. So risk mitigation is very paramount to you as a human being. Thank you so much, Ruth, for being a beneficiary of Mansa. You can also see some also other clients. Thank you so much for joining today. And even for the rest of you, I hope that you will make a step today to diversify your portfolio. Reach out to us and we will help you. Thank you so much.
Hallmark Institute of Professional School of Languages invites you to register for English. This includes testing of English as a foreign language, German, Arabic, Chinese, Sign Language, Spanish, Kiswahili. We are located at Agriculture House 3rd floor, Harambee Avenue, Nairobi. Learn at your flexibility either online or physically at the time of you chose. Our contact are here and in our social media pages at Hallmark Institute of Professionals. Welcome to the Center for Transformation.
Hallmark Institute of Professionals. Register for Business Management, ICT, Sales and Marketing, Purchasing and Supplies, Banking and Finance, Community Development, Project Management, Graphic Design and Digital Marketing. Enhance your professional competency as a CHRPK, CPAK, Certified Secretary, Insurance Specialist, Trust Secretary and courses in Pension Management. Check out our annual training calendar and corporate trainings on our website or call us on 0708 355 941 or 0700 031 162 or visit our offices in Nairobi. Hallmark Institute of Professionals.